All right, so we started a new week in Bitcoin, and we had news yesterday that the stimulus package had passed right after noon Central Standard Time. So on this chart, that's right here. Price did start to rally before that. Let's pull up the CMF and see if there was anything there. There really wasn't any divergence, so that didn't help us. And if we would have been trading the 30 MA, we would have been out of the trade. Let's see if on balance volume was telling us anything. On balance volume was pretty flat, so nothing special there. I mean, any patterns, I can clear up these. I mean, if anything, we have a cup and handle right here, which is kind of good if we can break out from it. Any other patterns, though, really nothing but a channel. I don't see anything really special standing out. I can go through, I mean, my funding rate had been negative. So it's usually a contrarian, not contrarian, account like counter, kind of counter trade this indicator. So yeah, I guess that would be right, contrarian indicator. So yeah, it was negative. It started going negative. Let's see, like on the third, people were getting looked like they were getting bearish. They got bullish here. That was the opening. Was it opening? Oh, I mean, for some reason they got bullish here. Right around 1 o'clock on the fourth. But yeah, it had gone bearish. Even on the 4 hour, it had come down. We did hit this TD9, which we didn't really go back and retest. I will go ahead and mark that. We didn't go back. I mean, we don't have to go back lower, but I like to see that, if it does, that we find support here as this goes to drop. I mean, we got a retest here. That was good. It broke out. This would kind of just get us in the range of that Fibonacci anyway, between 45 and 58. We're on an 8. The daily looks good. Funding rate did go negative for 2 days. Now we're back positive. What I was really watching on this daily moving average was if price would get below the 8, the intermediate, and then if that in that case also if the 8 would go below the 30 and price would also be below the 8 as well, which would imply that it would be below those two moving averages. That didn't happen. It found support and we bounced up. This is looking really good. Is the stimulus fueling this? It could. More stimulus. We have more money in the system. If the velocity of money increases, that's going to imply inflation. So this can be an anticipation of that money getting into the system and then driving asset prices up. So yeah, we'll see. I mean, yeah, there's a cup and handle here. The breakout would technically be right around like 56, 51.6, 51.7. We're close to that. If we get this day above this 2, that's even more bullish. If we really get it above this high right here, this 52.7, 52.8 area, that would be even better. I did say last week if we ended up getting, this high pullback with those moving averages starting to come down, and then we got a secondary high, that's kind of like what this was, and a sell-off and a breakdown, that we could possibly go below this Fibonacci area, which, provided support. Here you can see it. It's between 57 and 45. Based on historical data, 40K was very, very unlikely. Even that we would wick that low. We did have a retest area that I had of say 41.5, 41.4. Never got there. Can it get there once we run up in the bull market and then we sell off? Could these be areas to watch? I mean, they could be. But like I said, historical data shows that once Bitcoin goes 2 times its prior high and closes on the monthly, that it never wicks below that. So these might be a thing of the past. I think 30K is a thing of the past. We did have all these areas that didn't get retested, but as soon as we break to a new all-time high, they're kind of irrelevant. So these down here are irrelevant because I think just based on the Coinbase price, the high was 19,891, I believe. Yeah, 19,891, say 19,892. We broke. I mean, this would still be valid. This one would not be. I mean, this would be a large pullback, right? But we're looking good. I also did say I didn't think this was the high till we get, more, around 100K. I'd really start to pay attention. There's going to be indicators that are going to kind of be hinting that we could get a potential top in that area. What else? So yeah, I mean, if anything, this is consolidation. We could get. We're on a 6 of this continuous count. I mean, we hadn't had a really a red, a red week on the TD sequential yet, so we could have 7. So this is a 6. Next week, you would have to close above this 3. So basically, for us to get a green number, we would have to get a close above 57.5, say 57.489 is what it specifically is right here. Where this is. We'll see how it goes. Right now, we can look at some of our other indicators, the ones that I use regularly. CMF, kind of flat with price, nothing crazy here. Any divergence showing any bearishness. This is again flat. Let's pull up the Lucid SAR because I said during a bull market that whenever price breaks down to that area, that could be a potential buy. And last week, it was at 41.705, so that would have matched this. This week, it's gone up to 43.16. Could we get a wick down there? Possibly, but with the stimulus announcement, it passed the Senate. From what I understand, that they had changed some things within the bill, so the House has to re-vote on it. I think that's going to happen before the 14th of March, and then they would go to the president to sign if all that works out. So, this could be buy the rumor, sell the fact, or buy the news. I mean, sell the news. We'll see how that follows through. We can come in here and hit this high or get very close to it, and something I've learned through trading is that there are no double tops. If you've been in the space, you know who says that and who I picked that from. Tone Vase, I learned a lot of this stuff just by watching his videos and just consistently reading and getting more interested about technical analysis. So I found that to be actually true, just looking through multiple assets and trading that, double tops, they're rare. Now, it was something that could be traded in the past, and they were pretty common. You get these double tops and then price would fall, but lately, just the way the markets are acting, they're not indicators that you can use for them to go back down. We have a double top, and then it crashes. So anyway, we'll see how it goes. I mean, I like the way it's looking. The RSI did reset. We're kind of here on the weekly, kind of just moseying on around it. We did close below it, but then we found some strength. Let's look at the CMF and see if, I don't think that actually came up that we found strength there on the CMF because it was kind of trending down. And this could be setting up for the longer term, bearish divergence. As price goes higher, our CMF goes down. That could play out over, weeks and months. You can see it here back in 2017 as it did. Really, the CMF top was all the way back here in June of 2016, and price just kept on going up. But eventually it broke down, right? So you kind of, you kind of see it going down. It would have been nice if this would have peaked up, but I mean, where it topped in June of 2016, price closed at 768. Even if I move it here and then draw it here, it topped at, say 11,000, and then we still went on, how many weeks? 2 weeks later to hit our ultimate high in 2017. So yeah, I mean, we could have very well saw our top in the CMF, and it went from June 2016, basically a year and a half. So could we see? I mean, we put it in here, January. So another year and a half would be like next summer. Is that going to happen? I'm not sure. I'm gonna take what the chart gives me. We did get a peak here, another peak, and we're coming down. But look at 2017, how we just overbought, came down. There was multiple peaks in this cycle. 1, 2, 3, 4, 5, 6. You can say 1, 2. Definite little peaks. So we'll see how this goes. Longer term, maybe these the RSI and the CMF start to present less value. So we'll have to rely on some other things. But yeah, I mean, is there a reason to sell? no. If anything, you should be neutral, or if anything, I am neutral. I haven't sold really any major part of my position. I don't think I ever will be planning to, but for the most part, technical analysis. If you're looking at this and you're trying to learn for educational reasons, which this channel is about, you really wouldn't want to say I'm going to go full bullish and take maybe a larger position on this bounce until we get a daily close above this 52.7 area. That's what you would be looking for, and then maybe we can take a run at this all-time high again. What did I say in the last video? I'm trying to recap and remember. We did have the Mayer multiples cross, so it was like I'll pull those charts up, and I promised to get this on the chart on TradingView. I just need to find exactly how this math is. I found some stuff on it, but nothing that I can actually program into yet to create this in TradingView. So here, within 60 days, we'd reach whatever that target was. So 60, we missed it by 3%. Did we cross it here? We technically did, but I'm going to like this area first. So within 60 days, within, say, March, April. So like sometime before April, this top was 90. So I'm just trying to go with the way historical prices and how this Mayer multiple and what I've observed, what this shows. So is that a definite no? What's the probability of that happening? It keeps on showing up, and it's obvious. It's something simple that you can look at in the chart, that within 60 days of crossing these bands, you get to that upper level. Whenever you get to these overbought and to these bullish extension, what's called bullish extension overbought areas. So we'll see how it goes. We're on a 6 as far as the count that shows the continuation of the 9. We get 7. In order to get that 7, we need to close above this. That means probably a new all-time high next week. If we don't, then hey, we get our first red 1 on this breakout that started really all the way back in September 2020. So we'll see. I am going to go over some other stuff real quick. So I'm going to go over gold because so there's the breakdown. We're on a 9. This is support. This is a setup trend line on this one. Let's see. We have a target here of 1600. Maybe we bounce here on this week. This is support. If we do close the week below, I would say 1700. That's bearish for gold, and we are most likely going to hit our channel breakdown target of 1600. Our overall trend lines, these triple MAs, they're bearish as could be. You really would have exited if you would have had a gold position where you went in 100%. Say you didn't trade it, but you went in 100%. Did I accidentally move that? I did. I should lock that. Let me lock this. Let me lock this one too, so I don't accidentally move it. Oh, and it's already locked. Lock that one. Okay. You technically would have entered all the way here, right here, would have been 100% entry at, if you would have waited till the end of the week, say 12:55, and you would have exited 100% your position. I probably would have done it sooner, but if you're just trading the weekly, you would have done it. Is this it? It was below that, yep. You wait for a weekly close below the prior weekly close. It went higher, so you could have read this maybe as a bounce. Oh, man, you would have waited a while, and that's the thing about trading these longer time frames. But your return still would have been great. You would have exited right here. You would have exited at 1812. So let's just pull that and see what that return would have been over a specific amount of time. Right here, if you would have entered here, and you would have exited right there, 44%. That's a great return since 2018. Over 3 years, yeah, that would have given you somewhere around, say 12% or 15% year over year. I'd have to do the math, but 44%. Best traders in the world do about 20 to 30% a year. Hey, you would have got a return in something that's relatively, I guess, conservative, gold. But right now, we're on a 9. We'll see what happens with gold. silver should probably be getting on that lower end of the channel that it formed, but it's also starting to trend down. So we'll be careful. Let's look at some commodities. Let's look at oil right now. I know that's going up and it's testing that upper trend line, which is wow. So let me clean this up a little bit. Just real quick. Oh, not the RSI. Don't want the RSI. But the RSI is overbought. I want this TD sequential. And I think these are all good, right? I went over that last time that we didn't see any retests of the way I trade this. So, yeah, we're in the overbought area. It's going, man, well, we're not quite there, but we're close. This trend line is actually drawn on the monthly, I believe. Let me clean this up a little bit. Yeah, I'm pretty sure I drew it on the monthly, as a monthly trend. It's a longer macro trend. Yeah, I did. So here we go. So if we close the month above, 60, say 68. If we close the month at 68, that would be wow. So maybe we see a pullback right now in oil. We are on a 5. This would be, if we really got here on this monthly and went all the way to 72, say we close at 73. There's a continuation here, 3, 6, 7, 8. And then on the daily, we're probably extended. No, we're on a 3. We retest there, and we're going higher. So, wow. So what's the target for this? This is a trend line that's been intact since 2008, I believe. 2008, July of 2008. Where can we put... I mean, this would be a descending triangle. Or, descending triangle. So let's finish out this triangle. Let's draw it out. It'd be somewhere here. You kind of want to extend this out. Right there. I mean, this isn't exact. I mean, I don't like the way this is. Let's see if there's something better on the monthly, because no, I mean, that would be it, but the touches aren't exact. So this is more, yeah, I don't like, I mean, I want to draw a descending triangle, but that's not what this is. And this could be, you could take this as an outlier point where the futures had gone negative, but I'm not going to do that. Like I said, I don't like to force anything on my charts. The daily's not going to show anything because we went negative for a while. If anything, it'd be the monthly that would show some sort of strong wick. So how am I going to draw this? What am I going to do? I'm going to keep it as it is. And I will just draw a Fibonacci based on the prior high. That's something I'm going to be a little bit more confident in. So here to here. Oh, no, I'll just reverse it. No, that's right. But I would actually be the previous one. And I would just reverse it. So your low from the rally, since we're going more of a longer trend, would be right here. Right there. At $9.75. But that would be the trend. So we can see, based on that, reverse this. Reverse. Our resistance area would be 74.80. Oh, wow, look at that. This one lined up exactly where the price had gone a couple of weeks ago, and it started to consolidate. Right here, and it consolidated for a little while, which lines up with the Fibonacci. Oh, why did that say 59? I thought it was 50-something. 59. No, so not so much. I mean, it was close within like $4, but that's like 10%. 8 to 10%. Yeah, let's just say we're going to watch the 74 area. That would be some resistance, potentially. So where would be the target? We got a monthly close here. Yeah, I mean, just have to watch where it goes. Maybe we get some, we would get some resistance right here because we have a 9 and then we have, I mean, there's a 1. It's not a setup trend line because it doesn't complete the count, but somewhere right here we'd be watching. I mean, I can pull up the RSI. Still on the monthly. We're overbought. How long have we been this, or have we been higher before? We have 2007. We're getting towards the upper area of this, historically, what this RSI has been. So we'll see. Where would be our retest areas? They're already drawn. Is there any extra ones that I could add? Nope. Let's look at the 4 hour. Oh, not the 3, the 4. 4 hour on a 9. That'd be the area. This one. Yeah, so no. We'll see. This could be an extended area. What's the upside? I'm not willing to take any more risk on, or willing to make a trade on this because we're so extended. We're hitting a historical trend line. For some reason, I know I did say that whatever caused this to break out would be tremendous. I didn't know what it was, but what would be the catalyst to get this going when we're seeing massive amounts of money printing. Let's see what lumber is doing. And the bond market is just crazy. Interest rates are going higher, which is inversely related to gold prices. Yeah, so we're on a 6. I do remember talking about this and that we would close higher. There are no double tops, and look, boom, we went higher. Daily saw a 9 here. We retested it. Again, I think lumber's also probably pretty exhausted out. But our indicators are going to show, bullishness as far as the trend. The trend's up, obviously. We start to break down really once we get back to these areas. 800, say 850 area, we really start to probably go down. Well, this is an area that we didn't ever come back to. I'll mark that, but that's going to be green because if price came back down there, you would. I'll make that white. Yeah. So what else? Oh yeah. So TLRY. I keep on talking about this because I think this is going to be a big mover eventually. We hit the 1941 area, a retest. Man, look at these things. Yeah, we went a little bit lower. We went to 1823, but this is an area where you mark it and you can put a potential buy. Where are you wrong? You would have to evaluate it. I probably said you would have been wrong here at 1560 if you would have entered at 1941. The potential loss could have been, let's see, 1941. Where am I at? Right here. To low, 20%. That's a big swing. Maybe you could have made it a little bit tighter. But depending on your, you would have sized your position accordingly as well to see if we break down there and then we get to these lower areas. Would there have been a better place to put a stop? You can see that this is support, and we bounced off of it nicely. Look at there's 9s everywhere. 9 retest. You would kind of break down here to 17. That could have been better. 1750 area you could have sold off, and then we would probably go lower to these 13 areas. Yeah, stops. Always set stops. They save you. You know when you're wrong whenever you enter a trade. So we'll see how it goes. Let's look at the CMF. Yeah, there's some, as prices go lower, there's bullish divergence. I'm going to try to work on a strategy and implement that into TradingView. Read a paper that CMF is really a indicator that requires calibration based on the asset. So we'll see how that goes. Trying to expand my abilities as far as analysis goes to kind of developing my own strategies. And in order to do that, I need to get a better understanding of programming, data analytics. So I'm going to try to make an attempt to do that to improve myself and have just more ability to run maybe more ideas that I have, just to see, and I'll, we'll see how that goes. If I'm going to share that publicly or not, because strategies usually work until they're made public, and then maybe they lose their luster a little bit. But we'll see how it goes. Something I'm thinking about. But yeah, so that's about it. I mean, I said the S&P futures were up higher than they were on Friday. We'll see how that goes. Could get a positive open tomorrow, but there also could be a sell-off in the morning, a run up and then a sell-off, given kind of the psychology of trading, that this could be a potential area where you could sell some, recoup some of your losses, and then the trend would continue in its overall downward kind of trajectory. But we'll see. We have to see take what the market gives us. We're trending down. This was a reversal candle. We retested this area. We'll see how that goes. So yeah, everybody, thanks for watching, and leave comments in the comments. Thanks for watching.